It's time for In the Money, stock market action on AM 820 News. Here's Chief Market Strategist Gareth Soloway from InTheMoneyStocks.com.
Good afternoon, everyone. As always, a pleasure to be with you on this Sunday, March 2nd, 2014. Things are getting wild around the world, yet the markets continue to grind higher. That's what we saw last week. All right, and the S&P 500 closed at a new all-time high on Friday in spite of Russia sending troops into the Ukraine. And again, right now the markets, at least as of Friday, don't seem to really care what's going on almost anywhere. You know, they're in this kind of bubble territory where bad news is not necessarily taken as bad by the market, and good news is good news, and the markets seem to want to continue to grind up. Now, you guys know, I think I'm being a little sarcastic in saying that the markets continue to want to grind higher. They are doing that, but I think there are some fear underlying issues that we have to pay attention to. So just a couple to name them right off the bat here this morning or this afternoon here on In the Money Stock Market Action. You have Russia and the Ukraine situation. Now, that may not seem like a big deal to people here in the United States, but it has long-lasting and far-reaching impacts on trade, on potential stress on the global economy. There are quite a lot of issues there where if it bubbles over into a bigger conflict, there will be major risk to the markets. And again, this is where you have to decide as an investor if you want to be in the markets and say, well, I don't believe it's going to happen, and the markets just seem like they want to go up, or do you think that it's maybe worthwhile to be more careful in the markets because they're at such lofty levels and because at any point we could wake up one morning to some bad news that really strikes fear into the markets. So we have that going on. We also have a major credit bubble in China, which, by the way, the general media out there, the financial media, is mostly ignoring, and honestly, that's a scary thing. It reminds me very much of 2007 here in the United States, where, really until things started to collapse, no one really was talking about it. And China, I think it's important for us to recognize that they are the second largest economy in the world. All right, they are kind of in a position where it's actually worse than what the U.S. was in. And I don't know if you guys have seen some pictures from China, but they have whole cities that no one lives in. All right, the government there has been building, and lending money recklessly, honestly, to the point where, there are people that they're not going to move into these cities. It's just empty buildings, and they've been doing it to stimulate the economy. And again, just imagine if that was being done here in 2007, how much worse things would have been. And again, many people would say, well, what's the big deal? That's in China. It has no impact. Well, just like when the U.S. began to collapse, it had far-reaching implications on China, on South America, on Asia, across the board, and even on, obviously, Europe. The same thing will happen, especially when you're dealing with the second biggest economy in the world. So these issues have to be recognized. And then you go on to the aspect that Japan is printing money endlessly. They've actually stepped it above the Federal Reserve to stimulate their economy, try to get growth going there. And on the other side, the markets, which love when the Federal Reserve is printing money, the Federal Reserve Janet Yellen chairman came out this week and basically said, unless there's a substantial, and this was a change from a couple weeks ago when she was talking in front of Congress. This week on Thursday, she was in front of Congress again, and she actually changed her verbiage. She said before, if there's a change in economic outlook, then obviously we'll adjust our tapering policy. Well, this time she came out on Thursday and said, unless there's a substantial being the key word there, change in economic outlook, we're not going to stop our tapering. So the Federal Reserve actually wants out, which I never thought I'd hear that day come, but they actually do want out of the printing of money aspect to what they're doing, and they are trying to get out. And so far, again, the markets don't seem to mind too much. Every poor piece of economic news that we're getting, and we got more last week, the markets are just saying, hey, listen, it's because of the weather. And in all fairness, I'm sure there is an impact on that based on the weather. Obviously, another snowstorm that will be hitting and has been hitting the entire, probably middle of the country, heading for the Northeast over the next few days. But it's really been a brutal weather, but one of the reasons why I guess I moved to Tampa and to Florida to escape that kind of thing. And I'm overly glad, as I'm sure many of you guys are out there, that we are not in that area of the world anymore, or that area of the United States. And I mean, kind of, listen, it hasn't been the warmest winter here in Florida, but I'll take it over, 4 feet of snow in New York. So in any case, and that's where I did live before I moved down to Tampa. We can go into that a little bit later. And the reasons why I moved, they had implications not only based on weather. I was was interested in getting away from the cold weather, but also on taxes. I mean, this is a great area to be in. It's a fantastic area. Because I run my own company, InTheMoneyStocks.com, I could really do it from any location in the globe. Why wouldn't I take a tropical paradise where there's no state tax, no income tax, right? And sure enough, one of the many reasons, there's other ones as well, why I decided to move down to Florida and really enjoying it down here. It's a beautiful area, this Tampa area. Okay, a couple other things to go over here today, guys. Today on the show, we're going to discuss everything I've just mentioned in depth. We're going to take a look at the market last week and analyze it like the pros on Wall Street analyze it, not like the controlled media tells you it went down. And I want you guys to understand that, and I kind of reiterate that every week, that what I'm unveiling here, what I'm giving you guys, is the truth, not what you hear in the media. Now, the media has an agenda. They need you to watch. So they're going to tell you things to get your emotions going so that you make sure to tune in so that they can sell more radio spots and TV spots and so forth. I'm just here to lay it out on the line. I believe that telling the truth and giving the investor the honest basics is going to help them make money and get the word out and help the whole economy and the global picture. And obviously, that's why you're going to listen to me as opposed to go to other venues out there. All right. A couple other things to go over. We're going to give out new trade alerts. So I gave out trade alerts last week, and again, good performance there, some more money made. And basically, I think pretty much every week I've given out trade alerts, we've been making money so far in 2014. And these alerts, again, come from proprietary techniques based on calculations that we teach our members at InTheMoneyStocks.com. All right. Next, I want to talk a little bit about one of the guest stars or the guest appearances we'll have on the radio today. All right. She's a very special guest, an actress and musician. Her name is Rachel Fox. She'll be joining us later. You may recognize her from such shows as Desperate Housewives, Alias, and Hannah Montana. At the age of 17, and this is amazing, folks, at the age of 17, she has become an investing and trading guru. All right, so we're going to talk to her a little bit later, get her insight on investing and the markets. I'm looking forward to that quite a bit. All right, in the coming weeks, we're going to be talking to investor, businessman, and author Jim Rogers. He's one of the most prevalent heads and foremost authorities on the overall economy, and he'll be joining us in the next few weeks, along with Martin Armstrong, who's the former chairman of Princeton Economics International, as well as best known for his economic predictions based on the economic confidence model. And also we're going to be discussing things with the Overstock CEO, Patrick Byrne. All right, we're going to be looking at his views on the economy, and he actually added Bitcoin to his website in the money overstock.com, and we're going to be looking at why he added that in. Why is he giving that as an option? Does he believe it has a future? And there's some big issues with Bitcoin over the past week or so that we're going to discuss as well. So a lot of fun stuff coming on, guys. And what I want to do first and foremost is get into last week's market action. All right, and this is last week. I want to discuss it. I want to tell you what happened in the markets, and we're just going to get right into it. Number one, Monday. Monday, the market started with a bang to the upside. All right, the markets, again, broke above the master level on the S&P 500, which was 1850. And that's a level I've talked to you guys about for quite a while, okay? And we're going to discuss a little bit later on how that level can be looked at since the markets did close above it on Friday. But bottom line is, we did close above the 1850 level on Monday, we pushed above it earlier, only to reverse down by the end of the day and close back below it. Okay, so again, markets early in the week pushed up above that level and then reversed to the downside, and we didn't close above it. And then on Tuesday, again, we pushed above that 1850 level, and again, towards the end of the day, it was pounded down, and markets closed just below it. On Wednesday, same thing happened. Markets surged early in the day above the 1850 S&P level, and then were pushed down. So what you're seeing here is the makings of an epic battle in the markets at this 1850 level. And this is why you have to know about these levels, guys, and this is why I reveal them ahead of time. I told you a couple weeks ago about this actually going all the way back to early January, which was the key pivot high in the markets, that this was the level to watch. All right, and what's going on here? Why is the market early in the week pushing above this level every day and then getting pounded down? The answer is very simple. What was going on here is the market, all right, was getting retail mom and pops to buy in early. All right, the media continues to be very high on the market. Everyone's talking about it. Last week I divulged to you guys that $10 billion had gone into the market, into mutual funds, which is retail investor. That's mom and pops putting money to work. All right, so money flowing into the markets, and that was happening early in the day. As soon as the mom and pops wake up, the average investor wakes up, and the market's open, they're pushing their money into the market. Okay? Later in the day, the institutions, once the mom and pops have stopped buying, the institutions continue to unwind their positions. And that's why you saw the sell-off later in the day, Monday, Tuesday, and Wednesday, where it would close below that 1850 level. All right, so after hammering on it for 3 days, Monday, Tuesday, Wednesday, the markets finally pushed up on Thursday. Now, this was key, and this was one of the shadier things I've seen all week long. This is when Janet Yellen was testifying. So during her testimony, the markets were hovering on, above, below that 1850 level on the S&P 500. Now, with 10 minutes to go in the trading day, the markets were below 1850. And all of a sudden, we got a major buy program in the last literally minutes of the day, and it pushed the S&P above that key level. Now, many of you may say, well, what's a buy program? A buy program is literally where an institution, or it could be the Federal Reserve, presses a button, and all of a sudden the S&P gets bought up ridiculously. It just goes nuts, all right? And that's what we call a buy program. It's something that we've seen ever since pretty much forever, but more so since 2008, 9, and 10, since the market started to really collapse. It was something they employed to make sure they could get the market above key levels. So they wanted that market above that 1850 level, and I'll tell you the reason why. Because they knew the media would run with that story, S&P all-time closing high, and they knew they could get some more buyers, mom and pops, to buy the market. So we're going to take a quick break here. When we get back, we're going to discuss Friday's action. We're going to go over last week's trade alerts, and we're going to give out new trade alerts in the coming minutes. All right, guys? So this is In the Money Stock Market Action on 820 AM News Talk Radio, and I'll be right back.
Now back to In the Money Stock Market Action on AM 820 News. Here's Gareth Soloway.
All right, guys, back on the mic here on this lovely Sunday, and truly is a beautiful day outside. Hopefully everyone gets a chance to get outside for just a little bit here in this sunshine. Just going back to what I said before here, just to finish up last week's action. So on Thursday, we saw them have a buy program, and literally a button was pushed, and all of a sudden the market got bought up just to push it back above that 1850 level on the S&P 500. And again, what happened the second that closed there for the day? The media ran with the story. On every financial blog, S&P closes at new high. On the TV, S&P closes at new all-time closing high. And it was everywhere. And that creates an emotional response that triggers more buyers to step in. So Friday morning, as soon as the markets open, the markets again shot up. Why? Because the mom and pops were renewed in their buying frenzy. The average investor was running into the market. All right, and by the way, from Monday's action to Friday's close, markets were barely up. I mean, you were literally up 10 points on the S&P 500. So with all this price action, you get this sense that the emotional response is huge and the markets should be up 100 points on the S&P, but they weren't. And I think that's the important thing here, is that the triggering of how the markets have been trading is creating this continued buying in from the mom and pops, the average investor, the retail investor. But really, the markets are up slightly from the last week period. All right, just slightly. And by the way, so after that early morning surge again on Friday, the markets had a huge fall. The Dow reversed 200 points in the late afternoon session as issues in the Ukraine started to pop up with Russia sending in some troops. Now, that just shows you, by the way, if the Dow in an hour can reverse 200 points on that, what happens if a bigger shoe drops? And that's one of the main reasons why I personally still preach caution in this market. You know, who cares if the S&P goes up 10 points? I'd rather not be in it when it drops 100 to 200 to 300 points. And again, if that happens, who knows? But I'd rather not take that risk for a measly 10-point up on the S&P 500. And by the way, by the end of the day, the S&P did rally back just a little bit. We had a closing move to the upside there, a new closing all-time high, so the media could pump again all weekend long. All right, so that was last week. What we're going to do, we're going to go to a caller here. Craig, you're on the radio here in the Money Stock Market Action. How are you doing today?
Hey, Gareth, I just want to give you an update. We talked about this a couple of weeks ago, CNTF.
Yes, absolutely, I remember.
And he told us to wait till it gets right in that $1.70 range. And I don't know if you looked at it on Friday, the bugger's taken off. We had a guy come on Monday, and this is about the third or fourth guy now, who's very hot on the stock, and he's saying this. He's reiterating what everybody else is saying. They expect this thing in a few years to be the next Apple of China. So I'll go with it. I'll take anything positive. But now that the stock closed at 254 on Friday,
yeah, that's awesome
a hell of a
stuff.
move.
That was awesome stuff, yeah. So really what we're seeing here on CNTF, guys, and again, CNTF is a Chinese stock, and it's had quite a run now. We talked about it. I talked about it early in January with Craig when he called up, and I said, listen, it's up a little high right now. Wait for it to pull back to about 170. And at that point, it was about $2.20. So it pulled back to about 170, and sure enough, exactly like I said it would, it began to move up from that point on. And just a couple weeks ago, we talked with him again, and I said, listen, the key break is going to be the $2 break. $2.20 break right around there. If it gets through that, it has a little bit more upside. And sure enough, it did push through there, and off to the races it went, hitting a high of 266 on Friday. All right, now, just one thing to talk about here. I'm a swing trader. I'd be taking some profits off the table here. Okay? By the way, the daily chart has a topping tail in it. All right, so this is the key. The stock may be the next Apple down the line, but in the short term, I'm always skeptical of those claims. And I want every one of my listeners to be aware of that. All right? Someone can go tell me that this new biotech is going to cure cancer. Until they actually do, I'm not going to believe it. I've seen too many biotechs, come on and say, "Oh, we have this great drug," and then the stock goes at $10 and goes to $1 because the drug fails. All right? Obviously, a lot of companies have tried to cure cancer, and very few, well, none have actually. So, needless to say, be skeptical on claims like that. All right, has it been a great run in the stock? Sure. How did I know it was going to do that? Well, because I just followed the charts. I don't know if it's going to be the next Apple. I don't know if it's going to be the next Google. But the point is, the chart was telling me that this was the level to buy at 170, and then if it broke 220, it would jump in again. And sure enough, it did just that. And now, believe it or not, all right, believe it or not, the chart has a topping tail on the daily chart. What's a topping tail? Let's talk a little bit about a topping tail. Topping tails are, topping tails are bearish signals where a stock pushes up strong early in the day and then reverses and closes in the lower portions of the day. So if you have a long move up or a sharp move up and then a huge reversal by the end of the day to close in the lower portions, it's actually the lower 25% of the day, then that creates what we call a topping tail. And a topping tail is a notorious sell signal, all right, for those of us that follow technical analysis. So that's a good little analysis technique for you guys to use. If you see this on the charts, if you see a big push up in a stock and a reversal, by the way, same thing goes with a bottoming tail at the lows of a chart. If you see a big drop and then a reversal and it closes near the flat line, that's what we call a bottoming tail. And a bottoming tail tells us that the stock is about to reverse. So basically it's a reversal signal, and right now that's what I have on CNTF. So I'd be very cautious, Craig, on that. And, think about at least taking half off. If you want to hold half, I'm all for it. Maybe it is the next Google or Apple. But again, be a little cautious just because of what the chart's telling me. I think it's going to probably pull back based on what I'm seeing to about the 220 to 210 level. 220 to 210 is now support on the stock, and that would be where it starts to get intriguing. The other caveat I would say, if the markets start to collapse down, avoid at all costs, folks. All right, 210, 220 area is a good buy level as long as the markets continue to stay strong. If they get weak, spec money, which is what goes into small caps, runs for the hills. And stocks literally, trust me, I've made every mistake in the book in small caps learning how to trade them, and literally they can go from $5 to 50 cents in a bear market just because spec money is the only thing that's keeping them up, and when people are scared, they don't want to have spec money in the market. Okay. Let's get into a couple things here. I want to just go over last week's trade alerts and discuss how we're viewing them and what we made and how much we're going to donate to charity this week. And remember, folks, if I miss a trade, if I call out a trade, and I'm giving you guys 5 every single week, pretty much. If I'm giving you a bad one, if something doesn't go my way, what I'm saying it's going to do, I donate $100. That's kind of my penalty. I call that like the penalty box. Go in the penalty box and donate $100 to charity. And I always encourage you guys, and you guys should be donating quite a bit to charity because of these great calls. If you're making money, I expect you to donate a little bit. And it's karmish. You always want to remember, you give a little bit, you get a lot back. Give a little bit, get a lot back. It's the way it works. It's the way the world works, folks. And if everyone thought that way, I think the world would be a much better place. All right, so again, charities should be making out like a bandit. I'd hope to hear from more of you guys on how much you're donating and what you're doing there, but I am going to continue to donate. Right now, I've donated $850, and again, we have a couple weeks left in the month, in the quarter, I should say, and at the end of the quarter, whatever that number is, I'm writing a check to Metropolitan Ministries in Tampa, and they will get that donation, and then we'll choose a new charity for the next quarter. All right, last week we talked about the Qs being short, the S&P being a short, VXX being long, IBB being short, and Facebook being a short. All right, out of those 5 trade alerts, I was wrong on 2 of them. So we made money on 3, and we made good money on 3. And I want to talk a little bit about that. So, number one, as we know, the markets inched up a little last week. S&P closed at a new all-time high. So I was wrong on the overall market direction by a little bit. The market wasn't up a lot, but I was still wrong. So S&P inched up about 1%. So I was wrong by that 1%, and the Q's also about 1% move up, which is the NASDAQ 100. So right there, $200 goes to charity, putting the total at $1,050 going to Metropolitan Ministries. And this is great, guys. I love being able to donate and obviously having you guys do the same if you're making money off the calls, which you all should be if you're taking all the calls. Now, the winners, guys, this is where the rock star starts showing out. What I love about this is I might have one or two losers every week, but the beauty of it is that the winners are like 3%, 5% winners as opposed to a 1% loss. So you're making money overall, especially when it's basically 3 winners, 4 winners every week. VXX was a great winner, up 4.65%. All right, that was a huge mover. IBB short, which was down 1.6%, which was in our direction. As a short goes down, you make money. And if you had bought what I suggested, being the BIS, you made 3%. So another 3% and a 4.65% winner. The last one was Facebook. Most people thought this was nutty of me to say to short it after they just bought WhatsApp. But sure enough, guys, it dropped 1% by the end of the week. That's a 1% gain for us on the short on Facebook. And sure enough, more money made. So again, just to go over it, a negative, if you add the negatives up, it's negative 2% in total. And then when you add the positives up, it's about, we'll call it about 8.5% gain. So if you take the 2% off the 8.5% gain, you're looking at about a 6.5% gain on the week, folks. And that's not bad. For 5 days, if you can make 5, 6, 7, 8% every single week, you're in a pretty darn good shape by the end of the week, guys. That is awesome. All right, a little bit later in the show, we're going to be discussing the new trade alerts. And I'm looking forward to that quite a bit, folks. And again, the new trade alerts will be coming out here a little bit later, and we can make some more money next week. I want to discuss a couple things. Number one, the quarterly play on JCPenney. We're going to discuss a little bit later, which is worth $500 if I'm wrong. They had earnings last week, and sure enough, it was a blowout quarter. Not really blowout, but the fact is everyone had them priced for bankruptcy, and they aren't going bankrupt. And sure enough, the stock was up 25% last week. So in any case, when it comes down to it, why did I pick JCPenney? Why do I think that stock has good stuff to it? And the simple answer is because everyone hates it. All right, guys, we're going to take a quick break here. This is In the Money Stock Market Action on 820 AM News Talk Radio. We'll be right back. All right, welcome back, everybody. And again, a couple things I want to discuss here and just go over. Number one, I want to just look at the JCPenney quarterly play. And I want to just bring up the chart on JCPenney here because, again, this was a quarterly play that I gave out at the beginning of January saying I think it's going to be a good play for the quarter. And essentially, I said if I was wrong, I would be donating $500 to charity. And if I was right, then obviously you guys, I would hope, would donate a little bit of your profits to charity. So basically what I'm seeing right here, guys, is that the stock itself, all right, is trading right a little bit around that level where I gave it out. So initially, early in the quarter, the stock came down sharply. And then just last week, they came out and said, essentially, we're not doing as poorly as Wall Street thinks we are, as the average people think. And this is a common theme that you're going to notice, and one of the ways you guys can all make lots of money, all right? And again, one thing to understand here is that when everyone else hates a stock, and I need every one of you guys to start looking into this and starting to think this way, because this is a major problem with the average investor. The average investor gets their news from the media out there, the financial media, and the financial media is going to generate that emotional response in you by raising your fear levels and raising your greed levels. So they're gonna get you to that point where you're sitting on every edge of your seat. You're watching with quick interest to see what's going on here. And when they're talking about JCPenney, I mean, I heard literally people on the radio and on TV saying, oh, I think JCPenney's going to $1. I think it's going to $1. Then it'll go bankrupt. And this is what the common media outlet was spewing. So what kind of response? I mean, if you're an investor and you have JCPenney, right, what kind of reaction are you going to get when these supposed experts, and I'm doing air quotes here, are saying this type of thing? Well, you're going to be scared. You're going to be, oh, my goodness. I mean, if these experts are saying this, what am I doing? I don't want to be in this stock. I got to get out. And all right, so that drives the stock price down. All right, and basically what it is it's what I call fear overload. And fear overload, essentially, we see the stock going to levels where it's priced to essentially bankruptcy. Okay? And that's what happened to JCPenney. Is the fear got overwhelming in the early portion of this first quarter in 2014 in January and February. And then All of a sudden, the company comes out last week and announces earnings, and ultimately the earnings aren't quite as bad. And it's not that the earnings were good on JCPenney. I want to be clear on this. The earnings were not fantastic. It's not like, wow, their cores or their Target or their, they're not at that level by any stretch. But when you have a stock priced to bankruptcy, anything slightly above, which isn't really hard to do, is going to create a rally and what we call a short squeeze. And what's a short squeeze? Let's define a short squeeze. A short squeeze is where a ton of people are very negative on the stock, so they short it. And you guys know what shorting is by now because, in fact, a bunch of the plays in the market that we've been giving out every week are shorts. So it's basically betting that the stock is going to go down. So you have you have 100 shares short on a stock instead of 100 shares long. It's as if you're basically betting on red or black at the casino. One way you win, the other way you win. Which one are you going to bet on? And if it happens to come up as that one, then you win money. If not, then you lose money. So you're betting to the downside on that stock. And when too many people bet that way, any sort of good news creates all of them to unwind their position. And how do you unwind a short? All right, in your account, if you're short, it shows up with a negative in front of the 100 shares or the 5,000 shares or whatever amount of shares that you have. All right, so the only way you get back to the flat line, just like if you're long 100 shares, you sell 100 shares. In this case, you have to buy shares to essentially get out of your short. So if I'm short, and by the way, I'm not. I was long. All right, and I'm still long a little bit of the shares as well. But the point is, if you're short a stock, if I'm short 5,000 shares, I must buy 5,000 shares to get back to the flat line. And that creates what we call a short squeeze because all of a sudden you have regular buyers buying the stock, and then you have people selling or covering their short positions, which is more buying. And all of a sudden, the stock's off to the races and just gets pushed up exponentially. In this case, last week, JCPenney. So, again, it's kind of up in the air whether or not I'll be right for the quarter on this play. But what I love about it is that the gap up should be a turning point in the company in the short term. I have no idea where this will be in 5 years, but in the short term, I do believe it probably will head a little bit higher. Okay, and if it pulls back, it's going to actually give another buying opportunity as long as it doesn't take out the lows on the chart, really around the $5 level. You wouldn't want to see this stock get below 5. That's the one key right there. Okay, a couple things to go over here. I think what we're going to do is give out our trade alerts for the coming week here, and I want to make sure you guys are all aware of that. And then we're going to go into some more educational information about how to make money in the markets. I want to give you guys a little bit of my history as well. And number one, when it comes to trade alerts, these are going to be valid from as of the closing price Friday to the coming closing price Friday. And as I said before, if I'm wrong, I donate another $100 to charity. If I'm right, you guys who are making money on these plays, and again, the money's been probably you're averaging about 5% a week in profits, even when you take out a couple of the small losers. It's just the way it's working, so it's been great. And I do expect you guys hopefully to be giving back a little bit. And again, I tell you this again, it will come back to you tenfold if you do that. Okay? The first trade we're going to be is a long play on SDS. All right? SDS long. Now, what is SDS? SDS is an ETF that is, all right, and this is a little more complex. When you go long, when you buy SDS, all right, you're going to be short the S&P or the SPY, which is the S&P 500 ETF. You're going to be short by 2 times. Okay? So just be aware, SDS is number 1 on the long side at 28.94. Number 2, QID long, which is a 2 times short on the Qs, the NASDAQ 100 at 55.76. Then we have a short on Facebook, which we're going to continue to hold. We had that last week, made some money on it. The new level for that is 68.46, a short, so it must end below 68.46 on Friday. On the next one, a short on PRGO. I saw a nice reversal on Friday on that pharmaceutical play. The level there is 164.44. It's got to be below that. And short on Wynn Resorts. All right, with China nearing a financial crisis there, kind of in likewise to the U.S. in 2007, I think Wynn with Macau and everything over there and all the gambling, that could see a little bit of a pullback. And I wouldn't be surprised, especially if the markets kind of see some selling this week on the back of the Russian incursion incursion into the Ukraine. So those are your plays, and it's a short win at 242.49, and a short PRGO at 164.44, a short Facebook at 68.46, and a long QID 55.76, and a long SDS at 28.94. So there are your 5 plays for this week. And what I want to do now, folks, is welcome a very special guest to the show today. She's a phenomenal young actress and musician who has played countless roles, including Kayla on Desperate Housewives. At the young age of 17, she's conquering the stock market and fast becoming one of the elite investors and day traders in the world. You can follow her on Twitter at Fox on Stocks. I follow her on Twitter there. Or you can go on her blog at www.foxonstocks.com. I would like to welcome Rachel Fox to In the Money Stock Market Action. How are you doing today?
I'm doing great. How are you?
I'm doing very well. Great to have you here. Thanks for spending some of your Sunday with us. So,
of course.
What I wanted to do and just kind of go into how you got started in this. I mean, such a young age, and I think it's fantastic. I think it's a role model for all women out there to get into this. It's kind of a male-dominated arena, or at least it has been. It's starting to break that. And I think it's such a young age to kind of show young women that you can get into this trading environment is a fantastic thing. So how did you first get into trading?
Yeah, absolutely. Well, believe it or not, I was actually, I guess, formally introduced to it by another female, by my mom. She was the one, she got her degree in finance, and so I guess she's in a way sort of a pioneer because she was kind of the first among, women to really be interested in all of this. She got her degree in finance, and she had her Series 7 for a couple of years, and I was really young, I was like 8 years old, she started explaining the markets to me, and she was reading me this book called Understanding Wall Street, for a while, I was understanding the long side of investing, and then eventually, a few years later, I kind of was introduced to day trading, the concept of day trading, and I just thought it was so fascinating how you could just flip stocks like that and make money so quickly, and I love the idea of trends, and I'm a big-time pattern seeker in just everything, and it just was also interesting to me, and I looked more into it, and I opened a virtual trading account, started placing trades and seeing that I could do it and showing my parents that I could do it virtually, and it just is, the rest is history.
Wow, that's fantastic. That's so cool. It's interesting because when I first started, I was about 18 myself, and I started virtually online too. It was like a stock market game type of thing, and same kind of thing. I kind of got hooked into it as I was like, wow, it was a fake $100,000 portfolio, and all of a sudden I was making more money than I'd ever seen in my life, and I was like, whoa, and
why not just do this for real? Like, let's turn this over to a real account.
Exactly, 100%. So have you had other mentors as you've kind of advanced your trading, or have you kind of just gone off on your own and kind of explored it yourself?
Specifically with trading, I've definitely gone off and kind of explored it on my own. Neither one of my parents like doing any sort of day trading at all. They're very risk averse, and they're very safe, so they definitely keep me grounded and keep me on the safe side. I don't really have any mentors specifically with trading. I've met a lot of really, really amazing people as a result of my as a result of my trading, as a result of my blog, and a lot of people, I guess, who are definitely, who've just definitely given me some really awesome advice, some really amazing hedge fund managers and other blog writers, and a lot of kids actually who are my age I've met through Twitter and other places who are kind of like mentors to me in a way, who are really amazing traders. Who we, I exchange ideas with and that sort of thing.
Oh, that's awesome. Yeah. It's interesting. I did a talk at the University of Tampa over here, and there were so many people in that, freshman, sophomore class, and they were so into day trading and starting to do that. It is amazing how it's coming up as like this kind of new thing. I guess it's partially the fact that the younger generations are into that. They can be so quick on computers, and that's what it comes down to. You got to be able to make that split-second decision, as you know, to be in that stock or be out of that stock, and when to get in, when to get out. So that's really cool. Very nice.
Absolutely. Being like technologically apt, which is what our generation is, becoming. We're the technologically apt generation. It's so important with stock trading to understand how to work the computer and work it to your advantage and be just fast.
Yeah. Now, do you trade anything? I mean, did you like restrict yourself, or are you into like stocks, any sector in particular, or are you just kind of like you just go out and you look for what you like and you go for it?
I pretty much go out, look for what I like, and I go for it. I definitely have, stocks that I love trading that are super voluptuous and super volatile during the day. I love those. that give nice profit swings. I trade ETFs and SPY and IWM occasionally, but definitely I have a set list that I love.
I got you. Now, do you have a specific volatile ETF? Like, I'm just curious, like, you ever trade the VXX, like, for the volatility index?
Good question. I have not traded anything with volatility yet. I definitely look at the VIX to determine where we are, but I haven't traded. But I wrote a blog actually just 2 weeks ago on that, funnily enough, about trading the VIX and the different ways to trade volatility. And it's definitely something I want to look more into because I just think it's super fascinating. But as far as specific ETFs that I trade, I don't do any. Haven't traded any leveraged. Anything leveraged yet, but I trade SPY and IWM pretty often because they're really responsive to different trends and yeah.
Yeah, no, that's great. It's funny. I actually read that blog post, and it was great blog post, great article by you. And I do encourage everyone to go to foxonstocks.com and take a look at the blog. There's some great articles on there out there. So now, do you short stocks on a regular basis, or do you kind of just want to stay more with the long side of the market?
I actually short too much. I have shorting fever. I love shorting. I don't know why. I feel something with gravity maybe pulls stuff down faster. I don't know. But I love shorting. Short all the time.
Do you feel like the markets at this stage of the game, I mean, they're up 30% in 2013 and I mean, up 100+% from 2009 lows. I mean, do you think we're at a lofty area on the markets at this point, or do you think there's some more upside to maybe come?
That is such a difficult question to answer. I mean, I'm much more short-term viewed as far as what I focus on and what I trade off of. I think the high returns as of recently have been crazy, and I have these weird instincts to keep wanting to call a top and keep saying like, oh, this is it, but yet it kind of keeps going up. So I'm just staying super reactive as far as every single day looking at what the indexes are doing and technically just keeping on refreshing my analysis and reacting based on what I see every single day, not trying to I guess be bullheaded in a sense and be like, okay, it's going to go down. I'm going to keep shorting against what's going on. I'm just trying to flowing with the trends,
Absolutely. Yeah, I think that's a great point to for our listeners is that as an intelligent or advanced investor or trader, you can't tell the market what it's going to do. The market's going to tell you. You have to basically just react to it. And the faster you can see those signs, and that's why I encourage chart reading, is because the charts can actually give you a little insight into what's going to happen. And if you can react faster than everyone else, then you're the one making more money than everyone else, or at least not losing money. So that's,
exactly. Well, that's one of the name of the games here is to try and be first or to try and be fastest.
Yeah, I always say that too. Is sometimes I trade small caps and there's such a momentum in those small caps that if you get in and you just have to be the first one, and you never want to be buying that small cap when it's up 50% on the day. You got to be in the first couple percentage points. Otherwise, you just got to step back and not let that emotional surge be like, oh, I'm missing it, so I got to get in.
Right on. Yeah, don't chase it. Just don't chase it. That's the worst thing.
Now, do you have any what as a day trader, what's the number one rule that most people do you think break? I mean, do you have a rule that you struggled with? I mean, I know I've struggled with some things in day trading in my history too.
Good question. I think, I have this long-standing rule for everything, and that's never really take a stock tip. You got to mine your own ideas, figure out what you want from the bottom up, and it's so easy to just go, oh, well, they're all saying that market sentiment, I'm just going to do what they all say. And that can work, but everyone has different time frames. So I just say never take a stock tip. Just, do the work yourself, figure out exactly what you want, get the knowledge, learn how to do it, and then just do it yourself.
Yeah, that's
but
great.
I think, specific day trading rules, I would say I agree with your thing about not chasing when you see something going. Oh, okay. Actually, you know what? I have a better one. So as far as rules go, if you have a stop, if you have a price target, don't move it. Don't move your stops ever. Don't try and budget just because you feel emotionally connected to the trade or anything. Just be super mechanical. It's all a bunch of numbers. Just be about the numbers. Be about the trends. And don't move your stops. Don't move your orders.
That is a great one, folks. I mean, you have to. I think we all have to be better at accepting the fact that sometimes we're going to be wrong, and in fact, oftentimes we'll be wrong in a stock. And if we can cut the loss sooner than later, then you're ultimately going to protect your portfolio. I mean, listen, if you make $5,000 on 5 straight trades, but then lose $25,000 on the 6th trade, well, you've just had a great winning rate, but you're still flat in your account or maybe even down. So you got to make sure you really cut those losses. And, I had an issue, way back, and I still remember stock was gapping down tremendously. And I just started buying a little bit, but soon I was continuing to buy as it went against me. And I accumulated this huge position, and I actually dropped $40,000 in one day, which for me back then was a huge amount. And it was just like, it was getting like hit by a truck, and that was a great, as much as it was a painful lesson to learn, I've learned from that point on is that, don't necessarily average down. That's a bad idea. And just, listen, you got to have a max loss in there. No matter what it is, no matter what stock, if it goes against you this much, just cut it and walk away because it's a lot better than that type of loss.
Yeah, 100% right. 100% right. I think with a lot of us traders, we've learned those lessons and had to swallow those, but those are important to experience at the same time.
Absolutely. Now, do you see yourself like continuing in this groove of day trading? Do you see yourself maybe running a fund at some point, or you're just going to kind of do it for yourself and then teach? What do you have going on?
Good question. Well, running a fund, my gosh, I haven't even thought quite that far ahead yet. I don't know. Maybe. We'll see. I think that right now, yes, in day trading, going to day trade for forever, probably. I think I have the bug for it, and that's not going to go away. I definitely want to help spread the educational part of it because I think that there's just such a big gap of people who really want to know this stuff, but there's no one that breaks it down for them quite and gives it to them from the bottom up. There's so many people who don't understand what a stock is, and I just think that if I can further that education in teens and really promote, financial literacy, that'd be awesome. I'm actually right now I'm developing an app with a programmer that is going to pretty much detail out that exactly. It's going to have videos, and it's going to be kind of like gamified learning, basically. It's going to teach people the stock market through different games and through really basic, just the basics of understanding what a stock is, what an exchange is, and that's kind of the idea right now. It's just really promoting that financial literacy.
Wow, that's great. So now, if I was interested in getting this app, is there a launch date yet, or is it just kind of in the initial stages, or how would I go about that?
Yeah, so it's going to launch for both iPhone and Android. It's going to launch in August of this year. And the name is not quite official yet, so I can't release it, but the name will be released later this week. People can go to foxonstocks.com to get all the updates. And we're going to have an email list soon, so they can just give me their email or put their email on the website, and we'll email them all of the information about it. And,
Wow, that's exciting. I can't wait now. We'll have you back on just before it launches so you can give us more information. That would be fantastic.
Absolutely. I would love that. That would be great.
Great. Thank you so much for joining us today. Honestly, it's been a true pleasure, and we look forward to talking to you in the future, and thanks for giving us your insight today. Thank you so much, Rachel Fox.
Absolutely. Thank you, too.
Have a great day.
You too.
All right, folks. What we're going to do is we're going to just jump off here, take a quick break. This is In the Money Stock Market Action on 820 AM News Talk Radio. My name is Gareth Soloway, Chief Market Strategist at InTheMoneyStocks.com.
Now back to In the Money Stock Market Action on AM 820 News. Here's Gareth Soloway.
All right, back here for the final few minutes of the show, folks, and I want to get into a little education in the final couple minutes here. Before we do that, I just want to reiterate the trades for this coming week, and again, that's a long on SDS. That's buy. By the way, when I say long, it means I'm going to buy it. Buy SDS $28.94 per the closing price Friday. A buy on QID, 55.76. A short on Facebook, 68.46. And a short on PRGO, 164.44. And a short on Win at 242.49. All right, so there you go. You have your picks for the coming week. Let's try to keep this streak running of making around 5% every week on our investments overall. And again, should be interesting this week with what's going on in Russia. And again, some of the headlines coming out over the weekend are not looking too good. For instance, Ukraine leader right here on Market Watch, the main station here, country on brink of disaster, war, etc. Again, I think that's more talk right now in terms of I think it could be cooled down, but it's going to be interesting to see how the futures react tonight when we start getting those initial prints. They start at 6 o'clock, 6 p.m. The ES futures, the S&P futures will be opening, so we'll know pretty quickly how it's going to react initially for tomorrow. Thanks again to Rachel Fox for joining us here on In the Money Stock Market Action. That was great of her and some great insight as well on how she's come up as a trader. And we'll have to look for that app, when it launches in August. Okay? A couple things I want to go over in terms of getting you guys into the educational side. What are the investing basics to look for? Right? How do you start? I mean, let's say you're at home or you're listening in your car right now, and you want to know how you start looking for the next mover. I mean, how do you start picking stocks and being on the right side of the market instead of getting whipped by the institutions and the media to be on the wrong side? The number one thing I want you to do in the beginning here is start with the best of breed stocks. So if you want to start simply, start with the Dow Jones Industrial Average stocks. There's 30 stocks in the Dow. It's easy to Google it and find a list of them. And what I would say is start there. And you can also look at the index ETFs like the SPY, which is the S&P 500, and the QQQ, which is the NASDAQ 100. All right, the first thing I want you guys to do is pull up their charts. And I want you to pull up the daily chart. None of you guys really should be into day trading just yet. All right, if you're just a beginner, you want to be focusing on more swing trading, which is buying a stock and holding it for a week or two until you make 5% to 10% on it, and then you just want to move out of it. And if you find the right chart pattern, you can absolutely take that type of profit in just a very short amount of time. Okay, so pull up a chart. And you can do that on Yahoo Finance or on, Google Finance. There's a lot of, basically if you type in chart of Apple or chart of Google or whatever, you'll be able to find a chart pretty easily on the internet. All right. Now, what I want you to remember is everything you think right now when you pull up a chart as a beginner or a newbie, I want you to think, wait a minute, if I'm feeling that way, maybe I should do the opposite. And I know that's a weird thing to say, but I'm telling you right now, when you see a stock that's surging up and it's already up tremendously, the average gut is going to say, oh, I should be in that stock. Okay? That's wrong. You need to be looking the opposite way. You need to say, okay, well, maybe it's not a short yet, but I should start looking in that direction. The last thing I want to do is buy a stock when it's up already 30% in the last week or two. All right, now, again, the media is going to be pumping that stock, so you got to be able to hold fast. You want to have that kind of ability to stay back. Okay, but that's going to be what I need you guys to do is really hold back and stay on the opposite side. If your gut says buy, reevaluate. Go look at the chart. Is it too high? Am I paying up for this? If I go to the supermarket, do I want to look for sales? Well, yeah, I do. And do I want to do the same thing in the stock market? Absolutely. So start thinking that way. All right. If the chart is down significantly, start expecting a bounce. So generally, most people will get fearful, like on JCPenney when it's at $5. A lot of fear out there, but maybe it's about to reverse. And as long as you stay with the best of breed stocks, you're going to be in an okay situation like the Dow stocks, because none of those stocks, in my opinion, are going to go bankrupt. They're not in that position. So you're pretty good to go as long as you stay with that. Once you become more advanced, then you can kind of move outside of that realm. Okay? Next, you need to look to fine-tune your entry. How do you do that? How do you know where to enter a stock by buying it or shorting it once you find an approximate level? And to do that, what you're going to do is start looking at pivot lows, which would be the low on the chart from the past year, and the highs on the chart. If you see a high on a chart and the stock is running dramatically into it and it's extended, that's where you're going to start to look to short. If a stock is collapsing and it's coming into the low from 8 months ago, then you start looking to buy it there. That's called a double bottom at the lows and a double top at the top. Okay? And that's a way where you start going the opposite way there. All right? We're going to go into this more in the coming days, folks. All right? In next week's edition, I'm going to go into more educational information. But I want you guys to start putting together your keys here. This is Gareth Soloway in the Money Stock Market Action signing off on 820 AM News Talk Radio.